Hi everyone, Ali with the Home Investors team and broker with Remax. The numbers for the month of May have come out, and I'm just going to go over them with you real quickly. And then I'm going to go over some news that CMHC has announced. But let's get to the numbers first. Before I compare the aggregate numbers for the month of May, I just want to go over the bi-weekly posts that I've been putting up, where I'm comparing the Toronto market and the York region market to the previous 2-week periods. And for Toronto, the average prices are down by about 2% compared to the preceding two-week period. So the last half of May to the first half of May, prices are down by 2%. Transactions are up by 20%. And in York region, prices are up by 9% and transactions are up by 16%. So all in all, it doesn't seem like there's much of a slowdown in prices. And actually transactions are up, which is essentially a good sign for homeowners. Your prices aren't going down. And for buyers, it seems like there's more out there. And I think for the month of June and July, we can expect the trend to continue upwards until we're free and clear of this pandemic. So we'll find out as the opening of the market and we go through the 3 different phases. We'll see how that goes. In terms of the numbers for the entire month of May compared to May of 2019, prices are up by about 3%. The average price, as reported by TRREB, came out at $863,000. The number of transactions came in at just over 4,600, which is down 53% over May of 2019. However, you got to keep in mind that the listings are down by 53%. So all in all, it's not a major concern that the transactions are down, because listings are down, because everyone has been encouraged to stay home. So the good thing is that prices are not crashing because of the low number of transactions. And then days on market came in at 24, which is up from last year. It took on average 19 days to sell a property in May of 2019, and this year, May of 2020, the average days was 24. Once again, not a major concern because prices haven't crashed or haven't gone down. They're actually up over last year, so it's not much of a concern there. The prices in the 416 and the 905, as I've posted most recently, they're up across all property types, whether it's a detached townhome, semi, or a condo. The average prices have either remained stable or they've gone up, and you can go to the post and see the information there. And one other quick note, with respect to the averages that I went over, the market averages, keep in mind these are just averages for the GTA or for properties that were reported through Toronto Real Estate Board. Real estate is a local matter. So if you live in Richmond Hill, don't look at Toronto numbers. It doesn't apply to you. If you live in Vaughan, Whitby numbers don't apply to you, or the average numbers, they're just averages. Keep that in mind. You need to get localized numbers for where you live, for your community, to make sense of what's happening in and around there, whether you're trying to get into that market or you're trying to sell your property in that market. Get localized numbers, because then it'll make a lot more sense as to what's happening in your community. And if you want that, I can put that together for you. Just reach out to me. So with respect to CMHC, the announcement that they've made is that they're going to change the policy when it comes to down payments of less than 20%. And the main things you need to know is that one of the borrowers, if there's more than one borrower, needs to have at least a credit score or FICO score of 680. Previously it was 600, now they've increased it to 680 for down payments of less than 20%, where CMHC insurance is required. The GDS and TDS ratios are also being reduced, 39% to 35% for the GDS ratio, and 44% down to 42% for the TDS ratio. Now, these ratios essentially impact your qualifying amount, how much you can borrow, and how much your income can service a debt or monthly mortgage. So ask your mortgage broker a little bit more about the ratios, and they can explain to you how it impacts you if you're currently trying to get into the market and or have already or will be purchasing after July 1st. And then the last thing that you need to know is that you can no longer borrow money as a source of down payment. So before, previously, you were able to borrow money or take money out of an unsecured personal line of credit and put that towards your down payment. That's no longer going to be permitted. You can still have money out of your RSP, obviously out of your savings, and you can still be gifted money from family, such as your parents. However, any borrowed funds can no longer be used as a source for your down payment. All of this obviously is meant to curtail the demand that exists for real estate in the GTA. However, it's not all bad news, because there are two other mortgage insurers that you can still go to. They are private. However, they haven't adopted this policy, and it's at this point we don't know if they will or they will not. And those two are Genworth Mortgage Insurance and Canada Guarantee. So if you're buying after July 1st, and you no longer qualify for CMHC mortgage insurance because you're paying with less than 20%, your credit score is less than 680, or the TDS and GDS ratios put you out of the market, then you can still perhaps get insured through Genworth or Canada Guarantee. Speak with your mortgage broker. If you have any questions, contact me and I can provide you with some more insight, or put you in contact with my mortgage brokers that I deal with and that can get you qualified. So that's all for now at this point. Thank you for tuning in. If you have any questions, please feel free to reach out to me.